Hello, are you there?
I am.
All right, let's go ahead and kick into it. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Jonathan Heiliger of Vertex Ventures. Jonathan, thank you for joining us.
My pleasure. Thanks for having me, Hall.
So, Jonathan, how did you get into early stage investing?
Well, turns out I was actually sort of an entrepreneur at a pretty young age. I started my first company when I was 19. It was called ISI. It was an early web hosting company in the early days of the internet, and was very fortunate that that company was acquired by sort of larger and larger businesses in short order, first by a company called Global Center, then by Frontier Communications, and ultimately by Global Crossing. And when I was with Global Crossing, we were constantly bombarded by startups who wanted to be in our labs or get on our network, and you know, for running trials and being for us to be a customer and get some feedback. And I saw an opportunity for us to, instead of just reacting to what was coming to us in the market, to instead be more proactive and prescriptive about the things that we thought would give us a sort of differentiation in the market. And so I started a corporate venture fund for Global Crossing in the beginning of 1999, which, as I'm sure you can remember, was either a phenomenal time or a horrible time to be an investor. For us, it worked out pretty well. We quadrupled our money with the investments we made that year, and that was really sort of my first spark of being a later stage investor. But I was in my early 20s and not quite done operating and being an engineer, so I ended up leaving that firm that I started and joined LoudCloud, which became Opsware at inception, and then continued an operating career for another dozen or so years before I ultimately returned to venture capital in 2012 as an early stage VC, much more on the side of starting and investing in companies, in what we sort of think of contemporarily as seed and Series A investments.
Right. Well, today you're with Vertex Ventures, and what does your group focus on?
Well, part and part is the same thing, if you will. So we started Vertex Ventures in the U.S. about 3 years ago, in 2015, and we start and invest in companies that transform industries through software and data. To date, we've made 18 investments in sort of mix of seed, Series A, and a handful of later stage investments, but predominantly seed and Series A. So we're generally investing pre-product or definitely pre-revenue. Including in the 18 companies, we worked with the founders to start 2 companies, so actually kind of working on the whiteboard from idea through to inception to figuring out the product, and then working with them to build, recruit a team, build initial versions of product, bring them to market, et cetera. And so within I'd say our practice, we focus on 4 areas in particular. We focus on intelligent applications, so the transformation of the enterprise. We focus on data security, governance, and privacy, really just believing that the data is the new important asset of a company, whether you're in technology or oil and gas or healthcare. And then the third area we focus on is sort of the notion that many of these enterprises are envious of the FANG companies. They're envious of Facebook, Amazon, Netflix, and Google, and how their tech stacks have been created, how their corporate cultures have been created. And so there's a class of companies or category of companies that are either solving developer problems or technical problems inside of the organization that are sort of generally founded by people from one of those FANG companies. And then the last area that we've been increasingly spending our time in recently is the notion of Industry 4.0. And that, big, heavy industry, a lot of sleepy industries like manufacturing, logistics, transportation, et cetera, are really at the sort of early innings of adopting technology that will fundamentally change either how their business works or even fundamentally change kind of who is a big player in their business and in their industry.
So when you choose startups to work with, what are you looking for at that early stage?
It depends a little bit on the stage of the startup, but I'd say the sort of general things are, we're looking for a great team of people. Startups are long journeys. We, myself and my colleagues, my 2 partners at Vertex, have all been founders ourselves, and so we've walked a mile as a CTO or CEO of a company, and I think one of the sort of untold truths of venture capital and venture investing is you get to fire your employees, you get to fire your co-founders even. That often happens in case of bad breakup, but it's very difficult for a founder to be able to fire their investor. And so such like that relationship ought to be stress tested at the sort of earliest stages, and oftentimes it's something that's overlooked by founders. And so we look for the gritty people who have some unique insight into the market, likely born out of their own frustration with having to build or manage or operate other solutions that didn't meet their needs. Because we operate and start or fund companies that service enterprises, we're always sort of going back to our backgrounds as operators and also our network of people that are still operators to understand their pain points, their problem areas, where they see gaps in the market, and then using that as a way of filtering and prioritizing interesting areas and interesting markets to pursue.
Well, you focus on the enterprise software space, and of course, the landscape's continually changing there. What are some of the key trends you see coming up in that space?
Well, I think for the trend for a long time has been outsourcing to the cloud, for example, and that's I think something that at least in Silicon Valley we talk about as we've been talking about it for 10 years, and it feels like it's already come and gone. And in reality, enterprise cloud adoption is still very, very young and early in its progression. So it's an area we still spend time in, and that's the notion that enterprises really have this envy of FAANG tech stacks. And the notion that they're still looking for tools and technology that can help their organizations move more quickly or with more agility, or to be able to adopt the principles of what many of the internet companies have pioneered. I think the other thing we're seeing, and I'm sure you got the gazillion GDPR emails last month as that regulation went into effect in the EU and affected everyone around the world, is data governance and data privacy, whether it's GDPR or the fallout of Facebook's data issues, has really been brought to the I think forefront of the C-suite to think about as people build their own internal applications and also use third-party applications. And so that's another big trend that we see is sort of driving the adoption of a lot of different technology, whether it's about dashboarding and understanding data assets, or being able to map sort of who has access to what to prevent exfiltration or data theft and data breaches, or to just understand sort of where all the data assets are inside of a company.
What did you think of the GDPR as far as some thought that was a bit of a heavy-handed approach to it, and U.S. and other countries are going to be following along? How would you think the U.S. is going to respond with their version of the GDPR in the future?
That's a good question. I mean, I do think that the GDPR set of regulations was pretty sweeping and pretty bold for the Europeans to put forth. And now I think most of the world is fundamentally going to just follow their lead. And I think the sort of reality here is that data has sort of become the monetizable business asset, right? Sort of rules for governing how data is housed and accessed are now at the forefront of trade and regulatory conversations, whether it's GDPR or what's happening between the U.S. and China in terms of trade policy. Data sovereignty is a sort of phrase that's being kicked around, and it's largely because data is it's increasingly under attack. It's not only valuable, but it can be under attack from competitors, from state-sponsored actors, criminal enterprises, et cetera. And so as such, I think we're sort of at this place in time where we're staring into the abyss of not really knowing how data has been organized or stored or managed previously. And for technology organizations, largely sort of the CIO organization, to have to wrestle with that and figure out how to get the genie back into the bottle and put controls around how data can be accessed and used, whether it's consumer credit card data or PII, such as your birthday or who your friends are, that might be a sort of privacy or social violation.
Well, you mentioned the rise of Industry 4.0. It seems like we've entered a new stage of enterprise software from the past. Can you describe more about what you see as part of Industry 4.0?
Sure. I mean, we see Industry 4.0 really as the digitization effort that's happening across a lot of sleepy or heavy industries. I mean, it's trillions of dollars that I think industry analysts forecast will be spent on these efforts over the next 5 years. And something like sort of $90 billion of direct spend is the Morgan Stanley estimate of industrial IoT automation across sort of industries like electronics and engineering, construction, industrial manufacturing, automotive, et cetera. And this is really on the back of improvements in sensors and connectivity. The reduction in cost of things like robotics and actuators that previously were or heretofore have been controlled by largely vertically integrated industrial companies, where now startups or just the simple cost of manufacturing has made accessible technology with a level of precision and a level of data output that wasn't available before. And so, the things that this yields is sort of really low cost of data generation, of data analysis, and then being able to use that data to transform or drive new business decisions or workflows. And the sort of examples that I like to think about are, imagine if you could never have to have or manage spare parts again. Spare parts are idle parts that may or may not be used, and they generally sit on the balance sheet of every major industrial company. And with the advent of 3D printers, with the advent of blockchain for managing distributed relationships, with the advent of better data and analytics, well, all of a sudden I can get rid of spare parts and I can produce those parts on demand when a customer needs them. I can actually be much more responsive to my customer's needs while removing the overhead of having to have parts on my balance sheet. Or another example is that we spend a lot of time on is knowing that the world can be safer by scanning public, corporate, and other video streams to save lives, to secure assets, to be able to track goods and logistics in transit. To be able to do those things is only possible now with the sort of advent of the cloud, the sort of rise of computing power, with the advancement of algorithms, combined with those low-cost sensors in the field.
So given these new technologies, what investment thesis would you apply to that to get the best return?
Well, if I knew that answer, I'd probably be off doing it, and I probably wouldn't share it with the world, unfortunately. But I think it's largely an exercise in spending time with academic labs, spending time with founders, continually, meeting new folks with bright ideas about how they're, how they sort of identified a problem in the industry and what they think they can do to solve it.
It seems like data management and data monetization is going to rise to the top. When we look back on this time 50 years from now, I think we'll see that Google, Facebook, Amazon, while they're great companies, they were the great robber barons of the 21st century. We all gave them our data free, and they sold it back to us for vast sums of money. And it seems like people now have woken up with the recent issues with Facebook and other groups that data is worth something, and your time is worth something, and tools will be coming into place to really make that a more level playing field, and compensating people more accurately for the data that they put in and the time they put into these systems. Where do you think that's going to go?
I think we're already seeing that. So yeah, I mean, the examples you gave are, I think, correct. Those guys have built those folks have built tremendous businesses on the backs of people's data. People willingly gave it up for free in exchange for, the good or the service, which was communicating or interacting with their friends or searching for information and getting results. I think we're actually already seeing examples of this also pervade the enterprise landscape. And the notion here is that these are sort of data-first, full-stack companies, and that's sort of fancy terminology to essentially mean that you can reimagine archaic services and archaic industries with companies that are built in the era of technology. And so if we look at healthcare or insurance, companies like Lemonade, or fintech with companies like Affirm that are providing a new form of credit to people or Signified, which is an e-commerce risk company where they take a percentage of goods sold in exchange for validating the transaction. These are companies that are fundamentally changing, sort of, as I said, insurance or healthcare or fintech. But what they've done is they haven't come in and offered their technology as a solution to the incumbent. Instead, they said to the consumer, whether that consumer be an enterprise or an actual consumer, buy my product or use my product, use my service, and here's the benefit to you. And that sort of change in user experience, I think, is ultimately better for the consumer, ultimately leads to more transparency, because you're also reducing the number of hops or the number of steps that the consumer has between themselves and who touches their data and who ultimately is the custodian of their data. But I think we are at an interesting place in time where there's been a lot of discussion about who owns what data and whether the business owns it or the consumer owns it or a third party may own it. And I think I'm not able to forecast where it's going to go, other than to say that I think for consumers that use a free service, they should expect that free service is built on ultimately making money, and their data will be used as the product to make money if they're not paying for that service directly or indirectly.
Well, it seems like people are woken up to the fact that their data is worth something, and they will be less likely to give it away for free unless it's truly a valuable service. In many cases, people gave up their data and they got use of an app for a while or some trivial use case that really didn't compensate them for that. And I can see the day in the future when my data is out there and I get paid a recurring revenue every time somebody uses it. But it seems like there's a lot of implications to our software systems for doing that level of tracking, monitoring, and compensating. And you see a little bit of that coming up in blockchain and so forth. But do you think it will ever go that far?
Personally, I don't. I don't think it'll ever go that far. There have been a number of companies, I think, that that sort of tried to monetize personal data. I think they were too early. I think if a company were to start today to give users or consumers more control over their data and the ability to monetize it, I think they would likely be successful at building a service with millions, maybe even tens of millions of users. But ultimately, there's already billions of people on the internet. Roughly half the world's population is on the internet, and the notion of giving your data in exchange for a free service or as a discount to service has existed since the beginning of services, whether they be radio and filling out census information, ultimately television and being tracked and accounted for by a firm like Nielsen in the U.S. And then other firms around the world. The sort of statistics gathering has been sort of has been baked into the underlying business model of almost everything a human consumes. I think today there's obviously much more data, as you pointed out, by the likes of carrying around a computer in your pocket, a mobile phone that tracks your location, that knows what applications you use, that knows what you search for, and ultimately the custodians of that data become can become very, very powerful if they choose to monetize it. I think one of the most interesting cases or examples that hasn't been highlighted yet at least broadly in the press, has been the amount of data that Apple collects and tracks of users of Apple products and Apple devices. And, personally, I'm an iOS fan, I'm a Mac fan, et cetera. I think the company has done phenomenally well. But I think one thing that they continue to sort of trip on is delivering services to consumers and to their clients that add value to their lives. But Apple as a company is known for making money and monetizing their hardware. And so that's how they've chosen to sort of build their business. And they've obviously been phenomenally successful doing that. And I think the counter is that they've largely then sidestepped a lot of privacy and data collection issues because their consumers, their customers don't really feel like they're, quote, giving anything up to them.
Right. But I can see the day coming when I can give data to a group for using their app, but the moment I stop using their app, they have to delete my data. And, of course, today's software systems really don't accommodate that. They really don't let you do that. So once I give up my data, I never get it back. But I can see where the GDPR goes, that it really goes after that issue of I own my data no matter where it is.
You got it. Yeah, exactly. And that's one of the sort of cornerstones of the GDPR regulations is the right to be forgotten, that a consumer can request of their service provider, to please delete my data, and they have a certain cure period where they have to be able to delete the data. I think there was a lot of work leading up to the deadline for many large SaaS services and other types of companies to be able to implement capabilities that will allow them to actually do that. I don't know, to what extent those have been met versus they're still outstanding, but the fines are very, very severe from the EU. And quite frankly, I would expect a couple of companies to be made examples of in the coming period of time, to which then we'll sort of see the dominoes fall on whether or not e-commerce companies or other online services are fully compliant with the regulation.
Right. Well, it seems like the software systems in Industry 4.0 are going to be having to deal with some of those issues of people's data and monetization and ownership and deletion and curation and so forth that they haven't done in the past. In the past, data is data and it's just there. Whoever has it. But in the future, it's not going to be so clear cut. It's going to go back to ownership and monetization, and people are not going to let that go so quickly or freely. And it seems like software developers would be in a place to provide the tools to enable that, because people will pay for that, it seems like. But I don't know if you see that trend coming up or not.
Oh, absolutely do. I mean, and sort of in today's news, is let's see who initiated, Senator Wyden's probe into the mobile operators that were not only sharing consumer data, but with third parties, but then allowing that third party to resell consumer cell phone data. I think that's a great example of sort of Industry 4.0 working against consumers in the sense of the cell phone operators made a decision to share the data and thought it would be anonymized, or maybe they didn't know how it was going to be handled, but hadn't fully explored the range of possibilities. And lo and behold, a new type of data broker emerges that is doing more than just surfacing purchase history like most of the credit card companies combine data for, but actually revealing individual citizens' location data in real time. I mean, that's I think that's an incredible invasion of what most people would expect of their mobile operator.
So it seems like the market's changing very rapidly going in this direction, and would be a good opportunity for new people in the future. It seems like you're in a good spot seeing some of these come up. Do you have any specific startups you find that are doing some interesting things in this direction?
I mean, it's a field we're sort of knee-deep in looking at in terms of the data privacy, data regulation side of things. We're mostly seeing the sort of full stack data first or sort of technology first companies as the ones that are really winning the hearts and the minds of enterprises, because we're very focused as a enterprise investor versus building solutions that a consumer might access, or investing in solutions that a consumer might access directly. But for example, one of our very early investments is in a company called Fyde, Fyde, which is in the Apple App Store now, as a solution for consumers to protect themselves against spear phishing attacks, whether those be someone trying to do an account takeover of their Macy's account, or their Bitcoin wallet, or their bank account credentials.
So it seems like cybersecurity is drawing a lot of the initial efforts, and of course there's so much going on in the cybersecurity world right now, and it tends to be very invasive. But on the back end of that is the ownership, management, monetization, and other issues that will come with data down the way as well, that will provide a lot of new tools and new opportunities for development as well. It seems like that would be interesting to look at from an investment point of view as well. Or are you guys looking at that in that direction?
Honestly, we're looking sort of less and less at the kind of data processing, data storage side of things, mostly because we feel like a lot of the sort of current leading edge techniques and tools are already well covered by kind of the companies that are behind them. And since we principally focus on sort of early stage companies and companies that are pre-product or pre-revenue, We feel that that's a market that's sort of more mature and well served with businesses like Cloudera and what Hortonworks is doing and sort of big data and analytics and what Palantir is doing in enterprise analytics.
I see. Well, in the last few minutes that we have here, what else should we cover that we haven't so far?
I think we covered a pretty broad breadth, Hall. I think the other thing is we talked about it a bit is sort of the notion that Industry 4.0 is this very broad stroke view of several $1 trillion of spend. IT into itself is about $3 trillion globally, and Industry 4.0 is sort of roughly order of magnitude greater than that. And so, as we see technology invading logistics or transportation or manufacturing, I think one of the things we're really excited about there is not just the data that can come out of it, but the efficiencies, and hopefully those efficiencies can translate to better quality of life for workers and ultimately lower prices for consumers, because we'll be able to hopefully produce goods at lower prices and faster response times.
All right. Well, how best for the audience to get back in touch with you?
The best way is always to check out our website at vertexventures.com. The audience can also reach out to me on LinkedIn or shoot me an email. My email address is ajh@vertexventures.com.
All right. Well, I appreciate you taking time to share this information. Hope to have you back for a follow-up soon. And thank you so much for giving this to us.
Thanks so much. It was a pleasure.
And we'll cut it there. Did you have any questions for me?
No. This is great.
Great.
What is your business, Hall? I've kind of been following you for a couple of months, but haven't had the opportunity to connect.
So we help companies raise money, and we originally started under the name Texas Entrepreneurs Network and worked with Texas businesses, and then we built a good network of investors and started getting calls from outside the state, people wanting to access our investors. And we're not a broker, dealer, or registered investment advisor. We're just charging the company a monthly subscription. We're a recurring revenue business to help them get their business ready, docs ready, campaign ready, and then we make introductions to investors. And at heart, we're running investor relation campaigns is what we do. And those who are interested, talk to the companies, make the investment or not, and then go forward from there. We've raised about $350 million since we started in 2009. And then we've recently got a little bit into the blockchain world. We've got a number of ICOs coming in and have some investors interested in that space. But for the most part, we focus on seed and Series A companies in the U.S., although we are getting calls from Europe and China now to access our investors as well. So we're continuing to expand geographically as the world, comes into this tech sphere in that way. So we just have a lot of experience in helping companies get ready to go meet investors. I started 3 angel networks in Texas and had a large network of angels and VCs when I started this company in 2009. So I didn't want to lose them through the broker-dealer model for that reason. And so it shows the current recurring revenue model. And what we're finding now is a lot of recurring revenue companies really don't need to go raise large, discrete chunks of money. They just need a little bit at a time as they go forward. And so even their fundraise tends to model after the recurring revenue theme of the company that they're going with, and it's turning out to be a pretty interesting move as well.
Yeah, very cool. Cool deal. Well, I appreciate you reaching out and look forward to the podcast.
Great. It'll take us a couple of weeks to get it productized. We have somebody put the music on it, filter out the noise, and when it's live on the website, we'll give you an email announcement about it, and happy for you to use it whatever way you want, and hope to have you back in the future for a follow-on.
Yeah, thanks so much.